Shane, let me start with your overall reaction. What did you make of the quarterly number today?
Well, my reaction was one of relief. These are very good numbers. We've got that, obviously, the headline inflation rate down at 2.1%. Again, it's lowest in 4 years. We've got the trim mean, or the underlying measure of inflation, at 2.7%. That was in line with the market consensus. But interestingly, if you look at the last 6 months annualised rate, which was 0.6 in the quarter, for the last 6 months annualised, just take the average, it's around 2.6%. If you look at just the last quarter, it's 2.4%. So whichever way you cut it, these numbers look pretty good. We've got services inflation at its lowest since late 2022. Even the monthly inflation numbers, which came out at the same time for June, they showed inflation now below 2% at 1.9%, with the trim mean monthly inflation rate running at 2.1%. So whichever way you cut it, these numbers are on the low side. They're telling us that inflation is in the target zone, is around the midpoint of the target, and I think it is consistent with the Reserve Bank cutting interest rates again when they meet in August.
Well, Governor Bullock said at the last meeting, when she shocked many, that she wanted to see the next number and see it was heading in that same trajectory that they were hoping. This is proof of that. So we can see why the markets are reacting and pricing in now a rate cut almost certainly on August 12th. It'd be more than a shock if they didn't move then, Shane.
I'd be very shocked. Like, I was surprised back a few weeks ago when they left rates on hold, but I could sort of understand it. Maybe the RBA is a little bit of a cautious group. They want to wait a little bit longer. Fair enough. But I reckon I'd be totally shocked if they don't cut in August. We've now had some soft jobs numbers. We've got inflation coming in line, if not a little bit on the soft side. And I don't think there's going to be any reason why the Reserve Bank would alter their inflation forecast, which is the other piece of data that they'll be looking at that meeting, to show inflation now being above the target or anything like that. So I think the numbers are coming in line with that easing when we get to the August meeting. And I think the money markets are right to price in, like, I'd say 90% charts. I know the money markets are saying 100% charts, but I think it's right for the money markets to be pretty confident that we will get that cut in 2 weeks' time.
Shane, there'd been a fair bit of speculation around the government's cost of living assistance, the rebates, the energy rebates and so on, that it was artificially driving down inflation numbers. We've gone beyond that now, clearly now, in terms of where the CPI is at.
That's right. Look, you can look at these numbers and compare the electricity prices where they are today for the average household compared to what they would be without the rebates. And I think they'd be about 14% higher. If you look at the quarterly numbers, it's 18% higher. If you look at the monthly numbers, about 14% higher. So yes, the headline inflation measures are being pulled down by those electricity rebates still. But that's why the Reserve Bank focuses on the underlying measures, and the underlying measures are still pretty soft. They show that fall from, what was it, 6%, I think 6.5%, 7% at the high point a few years ago. We're now down in the target range, and depending on which underlying measure you look at, whether at 2.7% or potentially as low as 2.1% on underlying inflation. So that's abstracting from the impact of the electricity rebates. So I don't think the Reserve Bank can use that as an excuse anymore to keep rates on hold. I think what we are seeing here is broad-based downwards pressure on inflation. You can even see it in things like recreation costs. You can see it in communication costs. You can see it in the cost of rents. Housing costs, new dwelling costs are slowing down. Most services inflation has slowed down. Insurance inflation has slowed down. So it's fairly broad-based. I mean, there's some areas still causing pain. There's no doubt about that. And anyone who measures prices today compared to 4 years ago, they're still behind in terms of their wages. Prices would be up something like 20%. Wages might be up 15%. So we're still behind, except that inflation has come down at a target, and that's the key for the RBA.
Indeed, it is. Shane, thank you. We'll talk to you soon.